Mexico, Playa del Carmen. It has been a little bit chilly lately here, unusual weather. In any case, I am happy to be back with you guys live. It's been a while since I've done a live. It's a busy time of the year here for real estate, as you may imagine, with a lot of Canadians, Americans, and Europeans flocking to Mexico during the winter months, something I'm happy about. Ha ha ha. My friends, I am joined here today by one of my trusted business contacts from Canada, Mr. David Grossman. David Grossman is a licensed mortgage broker in Ontario, Canada, with over 22 years of experience arranging mortgage solutions for retirees, self-employed borrowers, first-time homebuyers, and real estate investors. He works with both institutional and private lenders and also structures opportunities for mortgage investors. Originally from the Toronto area, David moved to Wasaga Beach, which is a beautiful beach town in Northern Ontario, about 5 years ago, where he enjoys his life with his wife, their dog, and their youngest daughter. He's also an active singer, guitarist, performing regularly in and around the Wasaga Beach area. David, you are actually the principal at rockyourmortgage.ca, which is why, in case anybody's wondering about the guitar photo on our video cover.
It's actual guitars, yeah.
Yes.
Yeah.
And David, thank you so much for joining us today. My friends, the reason I wanted to bring on David today is because, as you guys know, I work as a realtor here in the beautiful Playa del Carmen area of Mexico in the Riviera Maya. And most of my clients are Canadians, Americans. I've had some European clients as well. And a lot of Canadians' wealth is tied up in their home equity, okay? And it's the same in the US. I know there's a bit of a lag on the video. I apologize for that, my friends. I'm using a co-working space and I'm not sure what's happening, okay? Hopefully you can, at least the audio comes through, okay? So what I'm here, why David is here with us today is because he, as a mortgage broker, is well equipped to help Canadians to access their home equity. The reason I also titled this video for Americans is because if you're an American or a European citizen, you would be well advised to try to find equivalent solutions in your area. If you're a Canadian in another part of Canada, not in Ontario, I'm sure David could refer you to a fellow Canadian mortgage broker in his network, okay? But essentially, what you're able to do and what David will speak to us today about is how you as a Canadian or as an international buyer can potentially access some of your home equity in order to fund your international real estate purchase, hopefully here in beautiful Playa del Carmen, Mexico. David, any starting words? Thanks again for joining us.
Well, thanks, Letitia. It's great to be on your webinar tonight. And yes, you're right. I moved up to Wasaga Beach during COVID. Mortgage business went online, and I no longer had to be like actually in Toronto anymore, because the job was no longer one where you had to be customer facing, right? So that's one of the interesting things that happen in our industry and many industries. People realize that there's a lot they can do remotely, which sort of ties in nicely with the idea of spending some of your time in a warm climate. If you don't have to be local or in any specific location for your work, then you can be anywhere. So Wasaga Beach is great in the summertime, but there's a heck of a lot of snow up here. So I know I visited you a couple of years ago in Playa del Carmen, and my wife and I are looking at opportunities to spend more time in the winter in a warmer climate. And the other interesting thing that's happened with Canadian real estate in particular, especially if you're in the greater Toronto area, but really across Canada, it's a phenomenon that real estate prices have gone up so much over the last 30 years. So if you bought a house for, $200,000 30 years ago, you could be sitting on a property that's now worth 1.5 or even $2 million. And Some people don't know that there's ways that they can safely tap into that equity as they retire. Um, Oftentimes, their income will go down, and they're faced with a crossroads. What to do? Do we need to downsize? There's all kinds of options, but one thing that people are doing is they're looking at opportunities to take out some of that equity in a way that's affordable, and buy investment properties as well.
That's right. And one thing that I've come across, and I know it's a situation with my own parents, people are attached to their home. If they've lived in that home for the past 20, 30 years, it's their principal residence. Investors have a different dynamic. They probably, many of them will already be familiar with some of the solutions you'll discuss tonight. But if somebody lives in their home, I know most Canadians, they're emotionally attached to their home. They are not in a hurry to sell. So, and especially, I know there's been a softening in the Canadian real estate market. So it may not even be the best time to be selling your property right now. But how can you have your cake and eat it too? How can you stay in your home and at the same time maybe buy yourself that beautiful vacation home in a sunny destination so you can escape the brutal Canadian winters. And at the same time, when the weather is nice in Canada, continue enjoying your beautiful home. So those are some of the solutions you're going to be discussing with us today.
Yeah, absolutely, Letitia. And your point about people wanting to stay in their properties is a good one. I'll just, as an example, I give is my father. He passed away a few years ago. He was 92 years old, and he was dealing with some health issues for a long time. And my stepmom took very good care of him, but eventually it was too much, and so he went into a for nursing care. But I will tell you, when he went in for nursing care, there was really like nothing specific wrong with him. He had just a bunch of little things, and it required maintenance. But that change in environment um, was a very serious blow to him, and within a few days, he passed away.
I'm
So
sorry.
right, so people really do see value, retirees, seniors, in that familiarity, being in the place where they've been, and with all the equity, if they've paid down their mortgage, or even if they haven't completely paid down their mortgage, there's ways that you can draw on that equity. You can draw using a line of credit. You can use a traditional mortgage if you have income. There's mortgages for, I also work with a lot of self employed people. And commonly, self employed people, they may have a very good business, but they don't look good on paper because they're minimizing what they report for tax purposes. And then the first thing that happens then when they go to the bank says, "Show me your last 2 years' tax returns." Well,
Mm,
tax returns are not always a good indication of how you're doing financially and what your ability is to service a mortgage. And finally, there's a reverse mortgage, which some people have heard about, and it's important to talk about this one too, because
yes.
some people have preconceived notions. First of all, reverse mortgages in Canada and the U.S. I believe are quite different. Where it's highly regulated industry here in Canada from a reverse mortgage standpoint, and there's really only three or maybe four companies that are currently offering reverse mortgages. And basically the regulators are there to make sure that people are not taken advantage of, to the extent, especially seniors, right? Because it's a vulnerable sector.
Mhm.
And with these, so if somebody basically a reverse mortgage is simply a mortgage where you don't have to make payments. It's that simple. Of course, you still need to pay your property taxes and your property insurance, keep that up to date, but you don't have to make your regular monthly mortgage payments. So what happens is the interest that's due that you would normally pay, it accrues. And people say, oh my goodness, I can't imagine I'm going to lose my home. The interest is going to accrue and it's going to be terrible. They're going to, I'm going to owe them money. They're going to kick me. Well, none of that is going to happen. First of all, the lenders really look closely at what is your age and what's the value of your house. And they're never going to lend you so much that they actually guarantee that you will never owe more on the reverse mortgage than when you sell the house. You're never going to owe more. That's number one. But the other thing is that, and I'll just make one more point and then let you jump in. The other thing is that, and we can look a little bit later on. I have one slide in particular. You've seen the slide, and it
Yeah.
shows how when you consider over time how house values increase, and if you consider putting even just a small mortgage on a property and the interest accruing over time, you'd be surprised how the equity doesn't necessarily erode at all. And we'll show a very reasonable example of that, where after 10 or 15 years, you borrowed quite a bit of money if you need it, and the equity hasn't changed in the property because we assume a very reasonable amount of increase in the growth of the value of the property compared to the interest that accrues. And you see that remarkably, the value, the equity hasn't even dropped.
That sounds amazing, David. And I'm sure the lenders themselves do these calculations before advancing these types of mortgages because they need to make sure they're protected in the case of an eventual sale. And I would like you to specifically get into this type of solution a bit later because I know it's something not too many people are familiar with. It's, as you said, it's a buzzword. People might have heard of it, but not too many people are actually familiar with how this product works. You've kind of entered, you described a little bit. I know you have some slides ready, and in the interest of being organized and talking about the different solutions, would you be still okay to share a few slides?
Oh, of course, yeah. I just didn't want to bore people with too much, but yeah, let's bring up
No,
some slides.
I want to make sure my
Absolutely.
audience understands really a few of the solutions that are available to them. And I know that at the end of the day, as you and I were privately discussing, it is a customized solution that you provide for each client. Okay, I'm gonna share your screen.
That's right. Are you able to see
Yeah, yeah, how your home equity
okay.
can bring you peace of mind. So I know this webinar was this presentation was targeted for retirees, of course, as you aptly pointed out. Some of your clients are self-employed individuals. Really, anybody. If you're in Ontario, David can help you. If you're in Ontario, Canada, if you're somewhere else in Canada, David can refer you to a trusted colleague somewhere else in Canada. If you are in the US, I myself may have some contacts, or David might have some contacts to mortgage brokers in the US. But yeah, what you want to look for is an experienced mortgage broker that would have access to this sort of solutions. And again, that's David's contact information. We're also going to put it on the screen, and I'm also going to put it in the description of the video. Please go ahead, David.
Okay, thanks very much for that, Lizzie. So you do see the slide that says how your home equity can
Yep,
bring you peace of mind. Okay,
yep.
very good. So that can mean, pardon me, that can mean a number of things, of course, when you have access to cash. People need to borrow funds for many different reasons. They may need to make improvements to their house. They may want to help an adult child purchase a property. You need a substantial amount of money, or you need some money nowadays for a down payment. It's hard for people to save. Sometimes parents can help in that regard. And of course, um, people can take out equity to buy a property in Playa del Carmen. Um, if that's something they would like to do, that's a great way to enhance your quality of life. And with that property, you can spend time down there, and you can also rent it out. You can
Mhm.
to a long-term tenant. You can Airbnb it, and from what I understand, Letitia, and I'm sure you'll talk more about this soon. I understand that investing in Playa del Carmen has proven to be a very good investment for many people. And I'll let you talk more about that. But as you noted, Letitia, when people come to me, it's all about finding the right solution for each person, and that's a picture of me there with my guitar. I've been playing a lot more since I came up to Wasaga Beach because your quality of life is important.
Yeah.
So what do you want to do in your later years and in your retirement years? Just briefly, I alluded to this earlier. 30-year home price from about 208,000 and change up to over $1 million over the last 30 years. Massive growth in the value of real estate. Okay, so there are many people who have equity in their homes and don't know how can they tap into that equity in a responsible way. Um, it's hard to get into the market. Of course, we have programs for that too. If people want to get in, buy a property in Ontario, but there are many creative lending products out there now for people who own property, who have equity, and who are considering maybe taking some of that equity out. And we talked about the different types of products. Home equity line of credit, that's the most flexible product out there is a home equity line of credit, right? Where if you need some cash, you can advance on the home equity line of credit, and you pay interest on an ongoing basis to service the debt based on how much you borrowed. And if you have cash, you can pay that line of credit down anytime. There's no constraints with a home equity line of credit. Really flexible product, but it does require that you at least service the ongoing interest payments. With a reverse mortgage, you have to be at least 55 years old. You do not have to make ongoing mortgage payments, as I mentioned earlier. You can. So there are times when you maybe have income, um, you can pay that mortgage on an ongoing basis, even the reverse mortgage. And then if you have extra cash at the end of each year, you can make a very substantial lump sum to pay the mortgage down. So it doesn't have to accrue, but it's there for you, that if you don't want to make payments or are unable to make payments, the mortgage can accrue, the interest can accrue. And again, we'll look at an example of what that looks like in a
Yeah.
minute. Okay, so
I just
moving
want
on.
to say I'm
Go
I'm a
ahead.
fan. I'm a fan of this option, especially for retirees. Like I said, my own parents are at a stage in their life where, once my father retires, he's choosing to work past retirement age. But once he retires, there will be a significant drop in his income. And I really wish people open their minds to the possibilities, because you really, with a product like this, you can have your cake and eat it too. You can continue living in your beloved home, and at the same time you can give yourself options. You could use that money to travel. You could use that money to buy a property here. And if we look at the property values in Canada, anywhere in the GTA, the Greater Toronto area, or any major city in Canada, but even the so-called B cities, the prices have gone up tremendously over the past 30 years, as you said. And property prices here, you can buy a one-bedroom condo for 200,000 US, okay, which is about 300,000 Canadian. So you could potentially fully fund a property here relatively easily, pardon my Eastern European accent, if you're sitting on, $1 million home in Canada, or you know what I mean, right? So,
Yes, for sure. Yeah.
and without, and the bonus of not having to make additional payments. So I'm really wanting to, not having to make ongoing payments. You
Yeah.
literally, you get to live your life now. I know a lot of mature Canadians think, okay, I'm going to leave my home to my children, because what else are they going to do with it? They to the extent that they want to stay in their home until the last day of their life. Okay, some, of
Yeah.
course, some seniors are looking to downsize. I get that, but many seniors who are not ready to downsize and they really love their home, they want to stay in it. Um, Eventually, whatever equity is left is going to go to the children anyway. But as you aptly said, you could fast track that process. You don't have to wait until you die. Maybe you are blessed to live a long life. You live till 90. We are living in times of increasing longevity. You could choose to help your adult children who are probably struggling right now with the cost of living and the real estate prices in Canada. Um, it's amazing. You could do a lot of things and you don't have to wait till you're 95, Anyway.
Yeah, absolutely. One suggestion I would have for somebody like in your father's position who may be like not quite ready to retire yet, but getting a bit older and getting closer to retirement, is that if he hasn't done so already, he could take out get a line of credit now, which he doesn't have to use. But if there's equity in the property, assuming that they've paid off or paid down at least to some degree their mortgage, if there's equity now and he's still a high income earner, he can get a line of credit now, and he doesn't have to borrow the money if he doesn't need it now. But once he retires, he
It's going to be a
might
lot
want
better.
to
Yeah.
access it. If he doesn't need it, he doesn't have to use it, but it's there for him. I always tell people, get a line of credit when you qualify.
Thank
You
you
get,
for that tip, David.
right?
That's a great suggestion. Thank you, and I will share that with my dear parents. Yeah, so that it can be there if and when you need it.
Yeah, you
And
never know when you might need it, right?
and let me ask you something: are the interest rates on lines of credit on HELOCs usually better than what you'd get on a reverse mortgage?
Yes, they are. Yeah,
Okay, so
because
that
with
was
a HELOC, you have to qualify typically in a traditional manner, meaning they want to see that you have a certain amount of income to service the debt, right? Because you will, with a HELOC, you will have to pay if you borrow the funds, you will have to uh, pay at least the interest cost each month. So they need to know that you've got a steady income in order to be able to do that.
makes sense. Thanks for that tip, David. Okay, please. Sorry, I interrupted you. Let's go.
No problem. No problem. So I alluded to before mortgages for self-employed. I talked about that. Some people wonder, how much money do you need to get into the market today? In Ontario, anyway, it's as little as 5% down. You could take a small HELOC or a reverse mortgage on your product and help your kids get into the market. Give them an early gift. And we have a variety of lending, whether it's A, B, or C. So A is, of course, means banks and other, prime lenders. B means alternative lending institutions. They charge a little bit higher than the banks. And C lending, that's private lending, which is more expensive. And private lending is typically for a short term, problem that you're trying to solve. Let's say you're selling your house, you're closing on a purchase, and you need the money out because you haven't sold your house yet. And you're stuck with two houses for a short period of time. You may not qualify for traditional financing in that case. So that's an example of when a private lender might be helpful. And of course, I do residential, commercial, and construction mortgages, mainly residential these days. So we've talked about the line of credit. Rates are like based on the current prime rate. Prime is currently, I think it's still 4.45. Yeah, it hasn't changed in a few months. It's at a pretty stable point right now. And of course, the line of credit is very flexible, but you do have to pay at least the interest each month. We've
Mhm.
talked about a reverse mortgage, so I'm not going to rehash this. all over again completely. You've got to at least pay your property taxes and your property insurance as you always would. You can make payments, and you can pay the principal down once a year. And it's easy to qualify as long as you're at least 55 years of age. Doesn't matter what your credit or your income is. The decision to lend is based solely on the value of your property and your age.
Well, let me ask you something, David, because as you know, I used to work in the insurance field, specifically life and health insurance. And I have to wonder, are there any health questions being asked of the person, or is it strictly based on the age?
It's just strictly based on the age. They don't ask health. They don't ask health questions.
That's
I mean,
amazing.
they assume you're in good health and that you're going to live a long life, right? That's the assumption.
Mhm.
Yeah.
Are there any, I guess I do have a question. Are there any penalties? I don't know, like what would happen, for example, if the person ends up passing away and what would happen? I mean, sorry, it's a logical question.
Yeah, no, it's a very good question. I'm gonna move forward from this slide because there's a lot of writing on it. It's distracting me. Okay, I'm gonna go to an easier slide and let me answer your question. Um, First of all, the reverse mortgage is not a it's not a short term fix. If you just need money for a bridge, short term, there's various ways to do that. The idea of a reverse mortgage is for somebody who wants to stay in their house indefinitely. Uh, I would say that it should be for at least 3 years. I'd say 3 to 5 years because for the first 3 years, if you want to get out of a reverse mortgage, there are penalties. There are penalties in year 4 and 5 as well, but the penalties are, more in line with the standard sort of a mortgage for early payout.
Mhm.
And after 5 years, then there's no penalty to get out. Now, the other thing is important to note is if you have a reverse mortgage and it turns out that either you die or you move to, if you die, there's no penalty. Okay, they don't charge you a penalty. But now again, if it's a husband and wife, for example, the mortgage will go. It will be automatically transferred to the surviving spouse.
Okay.
Okay, but if there's just one person or both of them die, then the mortgage is due, like it would be for any time there's an estate that where
Mhm.
the owner of the property dies,
Mhm.
the mortgage is due. The lenders are typically understanding. They're going to give you some time to get things together. Um, I'd say usually about 6 months, but there should be an estate trustee or what's it called? The person who looks after your will.
Executor?
Yeah, the executor. So the executor will need to, unless somebody in the family wants to buy the property, or maybe the property is left to children, but then the children will need to qualify for the mortgage on their own and pay out the mortgage, whatever mortgage is on the house. It was their, it was the money was loaned to the the original couple, right, who are no longer with us. So there's no penalty. Penalties wiped out. If they go to a nursing home or retirement home, the penalty is cut in half.
Okay.
So there is some compassion, most definitely. But as I said, it's not a short term solution. So, but if somebody's looking to stay at least 3 to 5 years, then a reverse mortgage is definitely something that they can comfortably look at.
I got it, David. I mean, at the end of the day, a lot of Canadian seniors still have the idea that when one or both of them were to pass away, the house will be sold. The children are probably going to want to sell the house. And if there are multiple children involved, the proceeds would be divided. So there's already the thinking that there will be an eventual sale. a reverse mortgage allows the seniors to continue living in their home and at the same time continue enjoying their retirement lifestyle, not have to sacrifice lifestyle because, as we spoke earlier, a lot of Canadians are property rich, and especially in retirement, they can be cash poor. Pensions are not, uh, unless, well, with few exceptions, Canadian pensions are not extraordinary, and the same goes in other countries, I'm sure. And I know you're not qualified to speak about the equivalent U.S. products. Any of our listeners who are from the U.S., please speak to a mortgage broker in your area. But we know that income gets sacrificed usually in retirement unless somebody has planned ahead. They own multiple income properties and other sources, other investments. And for sure, there are Canadians who are in that position. But I've even come across, David, people, wealthy Canadians. I remember the case of one gentleman who was literally sitting on a $2 million home. He had adult children, 3 adult children. The children were not doing extraordinarily financially, okay, and I remember he used this sort of solution to help his adult children. He wasn't ready to sell his house. He loved his house, but he was already, I want to say, in his 80s at this point. And anyway, it was a great solution, and I would like more people to know about it. And
Yes.
from my perspective as a realtor in Playa del Carmen, this is a solution for you, mis
Yeah.
amigos. Yeah.
Yeah,
For
for
some
sure.
reason.
Well, I mean, I think one of the concerns people have when they think about, taking out equity out of their properties is, they might need the money, they might want the money to improve their lifestyle. They might need to make improvements to the house. They may want to travel. They can also give an early gift. What's better than giving a gift to your adult child so to help them buy a house and you can watch them enjoy it, right? So I think it's all about balance, right? You want to leave something behind, but at the same time you don't want to be living in squalor, that's for sure, and you want to enjoy your life. If you've worked hard, the years pass quickly, and you want to be able to do things that are important for you as well, and enjoy your retirement. This
Tell
slide,
us what this slide is showing, David.
this slide shows a few things, and if people are going to make any notes or take even one photo from this presentation, I would ask them to take a photo of this picture because there's a lot of interesting messaging in this picture. Um, there's one other thing that I wanted to mention that we didn't. It was on one of the earlier slides, but we didn't talk about it, and that is that. Pardon me. You don't have to borrow a huge amount of money. Like maybe you just need um, a small amount, 25,000, to deal with some debts or whatever, and then you can have your house pay you like $1,500 a month, for example, right, to
Wow.
improve your cash flow.
Mm.
Um, but this slide assumes that you're taking out a reverse mortgage for $350,000 on a $1 million property, because 350,000 I think would be close to the amount that would be enough to. Can you purchase anything in Playa del Carmen for
Oh, oh
350
yeah,
Canadian?
oh yeah, yeah.
You can.
You
Okay.
can buy at least a beautiful one bedroom in an amazing building with amenities, and that would be Canadian dollars. If you wanted a two-bedroom, you'd be a bit more, but uh, definitely you can buy yourself a gorgeous property here for that price in a very desirable area. 10-minute walking distance to the beach, walking distance to grocery stores, cafes, restaurants, a building with amenities, rooftop pools, gym, 24/7 reception security. Like definitely a good standard of unit for sure.
Okay.
Mhm.
So if you have a property that's worth $1 million today, you could take out a 300, assuming you have no mortgage on it today, you could take out a $350,000 mortgage. To get 350, you probably need to be around 70 years old or so. Because remember before I said it's based on the home value and your age. So if you're 70 years old, you might qualify for around 35%, to take out 35% of the home. So that's $350,000. Okay. Now you'll notice near the top right there where it says in 10 years, the value is going to be 1,343,000 and change, right?
Mhm.
And that's based on an annual appreciation of 3%. Now,
Which
it's
is very
important.
conservative, very
It's
conservative.
very conservative because you'll remember early on in the presentation, there was a slide where I said the average percentage annual growth over the last 30 years was 5.6%.
Now, was
That's
that in Ontario, David? Was that in Ontario or was that in
I
Canada?
believe that's a Canada-wide figure.
Okay, still,
Right,
exactly.
right.
Anywhere
So
in Canada is going to be higher than 3%.
right. So 3% is pretty conservative.
Mhm.
And then we're assuming you take out $350,000. And then in the third row, it says interest.
Mhm.
And like in the column that says in 10 years, it shows you 342,000 and change. So this means that in 10 years, if you made no interest payments at all, you would owe $342,000 and change in accrued interest. And if you look at the equity that is in the home today versus in 10 years, you'll see that it has not changed.
Mhm.
So that's quite remarkable because,
Yep.
I mean, it's just houses just continue to appreciate. So in this scenario, you could get to stay in the home that you're comfortable in. You could own a vacation property in Playa del Carmen. You can go, you can spend time there, you can invite your kids to come up and spend time with you, and it doesn't even erode the equity of your Canadian property. So your kids are on
So,
retirement on at the time of when you pass, you're still leaving $650,000 equity on your Canadian property, in addition to the property in Playa del Carmen that hopefully you got to enjoy time with on your own and with your family, if you have family, and if that's a concern. So, yeah, pretty interesting slide, I think. And as I said, I
absolutely.
encourage people to take a snapshot. You got my contact information there, and
Yeah, do
people,
you have another slide just with your contact info, David?
sure. Um,
So
just
again, yeah,
the,
some myths of reverse mortgages.
myth, yeah,
Mhm.
you always retain ownership. You will never lose your home, and it's not just if you're in trouble, but it is about lifestyle and investing, making good investments. So again, there's my bio. 22 years in the business, handling all kinds of different types of mortgages. It's all about finding the right solution, and there's my contact information.
Perfect. And you know what? It didn't occur to me to put my contact details in the slides, but that's okay. I have them at the bottom of my video in the description. Yeah, thank you so much, David. I hope my audience enjoyed that. I will also put your contact info in the um, at the bottom of the video in the description, both on Facebook and on YouTube. And thanks everyone for tuning in. I highly recommend if you're in Ontario and you are considering your options, whether to buy something in Ontario or again, enhance your lifestyle in Ontario or any kind of mortgage solutions you require in Ontario, David is your man. And of course, if you are aspiring to buy property here in Playa del Carmen, in the Riviera Maico, this type of solution could also help you with that. On this webinar, I didn't get into the fact that we do have some local mortgage solutions here in Mexico. They are a lot more expensive than what David can give you access to. So I really think that if you're a Canadian or an American or another international buyer who owns a property in Canada, in the US, in your European country, I would strongly suggest that you look at local funding options, such as what David has available, before we look at the local solutions here in Mexico. Interest rates in Mexico, to give you an idea, you're looking at about minimum 11%, 11 to 13% once all the fees are added. So I'm sure your rates, David, are much better than that. Even in fact, I don't know. We didn't speak about rates on reverse mortgages. Would you mind sharing a bit
Sure.
on that?
Sure. So right now, 5-year fixed rate is around like between 6.5 and 6.8%.
Mhm.
So that's the rate we used on that former slide where we calculated what the total amount of debt would be after 10 years. That's the rate we used because
Okay.
that's the current rate which you could get now.
Yeah, and just to give you guys an idea, even Mexican citizens on a first mortgage, the lowest rates I hear about here are about 8%. So whatever solution you can access in Canada or the US, or again, I'm not familiar with European mortgages, but definitely Canada, the US, you're better off looking at your home solutions and use that to fund your Mexico purchase. That would be my first piece of advice. If you're not able to qualify in Canada, then we can look at solutions here. But definitely call your mortgage advisor in Canada, people like David. Thank you so much, David, again. And thanks again, everybody, for tuning in. David,
Thank you
I
very
mean,
much for having me, Letitia. It's always a pleasure, and I concur that if somebody's thinking about a vacation property and if they haven't been to Playa del Carmen, or if they have been and they're looking at, they should call you because I know that friends of mine and clients of mine have had an opportunity to meet with you in Playa del Carmen, and they had a great tour, great opportunity to see around the city and where things are at. And it looks like there's some really beautiful real estate there. So,
definitely,
yeah.
definitely. Thank you so much, David. Bye, everybody. Have a beautiful rest of your week, and I will see you soon. Bye
Thank you,
bye.
Letitia. Bye, everybody.
Thank you, David. Bye bye.